This is the Asia Trade. I'm Shery in Tokyo.
And I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asia markets are set to open under pressure as big tech and chipmakers get hammered by concern about tighter US restrictions on sales to China. The dollar is tumbling to this weakest in almost 2 months, a move amplified by a sharp rally in the yen amid speculation of further Japanese intervention. And Republican vice presidential pick J.D. Vance set to speak at the convention while President Biden tests positive for COVID. Let's get you straight to today's agenda.
At a time, Heidi, when we've
breaking news when it comes to the political situation there as well, right, Shery?
Yeah, at a time when we've been really focusing on the health of both physical and mental of President Biden, his recovery will be key here, right? Especially after he said in an interview that he would only consider dropping out of this race if there was a medical condition. And we're now hearing from the White House that he has runny nose, that he has a cough, but that the symptoms are mild. We continue to watch the latest developments around his health, but of course, it will really make an impact when it comes to his political campaign, because he kept veering towards the left and more progressive ideas, including erasing all of medical debt, not to mention really capping those rent increases.
Yeah, that's right. And a lot of the geopolitical risk is interesting when you take a look at markets at the moment now, starting to really flip towards the possibility of a Kamala Harris presidential campaign there. Of course, we need to wait for more details in terms of how this plays out, but it has been sort of one hit after another when it comes to the pressure on President Biden in his re-election campaign. Taking a look at one of the other aspects of how markets are reacting to geopolitical risk at the moment, and it's the drop that we saw in chip stocks. Interestingly, of course, this has been such a huge driver when it comes to the rally that we've seen across global markets, particularly in the US and in some of these North Asia major markets there as well. But Japanese equity futures are really falling, not just on the stronger yen, but these concerns over the chip fallout. We had the Nasdaq dropping almost 3%, the worst day since 2022. Nvidia, Advanced Micro Devices, Broadcom, etc., driving that closely watched semiconductor gauge down almost 7%. That was the biggest slide since 2020. We also saw some of the European names plunging there as well on the back of the sources saying that we're hearing that the Biden administration are considering these severe curbs if companies like Tokyo Electron, ASML keep giving China access, Shery.
Take a look at how U.S. futures are coming online in the Asia session, because we're seeing a little bit of a rebound. What was interesting in the Wall Street session is that we saw this enormous pressure, as you said, on the tech side, the NASDAQ 100, the NASDAQ, the S&P 500 as well, given how they're dominated by the Magnificent Seven. But at the same time, we have the Dow continuing its rally, gaining for 6th consecutive session at a record high again. We had a little bit of pressure on the U.S. dollar. We're talking about the weakest levels since May, but that was really to do with what's on the other side of the trade. Take a look at how Asian futures are setting up, because it's been really volatile a few days for the Japanese yen. Of course, we're talking about that potential intervention coming last week, more than $20 billion spent by Japanese authorities is a calculation according to data right now. But given that speculation of potentially more intervention to come, the comments by former President Trump when it comes to flagging the weakness of the Japanese yen and perhaps a little bit of profit-taking ahead of the BOJ policy decision later in the month, that really set the tone when it comes to the Japanese yen. Nikkei futures gaining 0.2%, Heidi.
Yeah, and of course, just recapping the news that we had over the past hour, which is President Biden testing positive for COVID-19. Let's get some more when it comes to the broader implications for his re-election campaign as we get down to what is a critical few months going into November. Bloomberg's political news director, Jody Schneider, is in Milwaukee for us. And Jody, this is sort of the latest blow when it comes to what has been a difficult few weeks for President Biden. What do we know, and how does this potentially change the picture going into the election?
Yeah, well, Heidi, we know that he has tested positive for COVID-19. We hear he has a mild case. He had to cancel a major speech to a Latino advocacy group in Las Vegas, swing state Nevada, somewhere he wanted very much to be, kind of in counter programming to the Republican National Convention that's going on now. Tonight we'll hear from J.D. Vance, the nominee for Vice President president tomorrow night, Donald Trump himself, the nominee for president for the Republicans. And the current president, Joe Biden, wanted to be out there on the campaign trail showing he was fighting too, that he was going to stay in the race, as he has been saying consistently since that disastrous debate performance several weeks ago. But now this all plays into the concerns about his health and vigor. Even if it's a mild case, he's having to leave the campaign trail. And this comes also as he gave an interview to BET News, in which he said, he was asked if he would leave if a doctor said he should. And he said, well, if there was a doctor who gave me a particular reason to leave the campaign, I guess I would, that he would consider that. So that left the door open a little bit more. We also heard today from a key Democrat, a representative in California, Adam Schiff, who is running for the Senate in California, and he said clearly that the president should exit the race. Another big voice in the Democratic Party making that case. So while he claims he's going to stay in, all of this does not paint a good picture for President Biden and this election campaign.
At a time when he's really been trying to strategize to get his campaign going again, right? I mean, we saw him and his strategies and his campaign vows turn a little bit more to the left to get those progressive votes.
Yeah, and that's what he's been trying to do, really, to figure that he has a lot of the kind of center votes, but to try to go to the left, to try to get some of these younger voters that he knows he'll badly need. Turnout is going to be a huge issue for the Biden campaign. The enthusiasm gap, it's called, both for probably the Trump campaign as well, but certainly after that debate performance and a lot of Democrats saying they're, just not feeling it in terms of the enthusiasm. But again, what's so concerning about this, if, many elected officials and public figures have gotten COVID recently or in the past few years since it became since it wasn't such a major health concern. But this plays to these questions of his viability and his ability to, his health and age concerns. That is what is so concerning about even a diagnosis like this, even if it's a mild case.
Jody, what are we likely to hear from the Republican side in terms of how they're maneuvering the situation and sort of the broader tide at the moment?
Well, tonight we're really going to see the other side of, we've been talking about President Biden here. Tonight we are going to see J.D. Vance, the vice presidential nominee, was just named that by Donald Trump. We're going to see him take to the stage and make what we think is going to be a very pointed speech about what needs to happen in this country, what is going to be about what we think forgotten Americans, given his hillbilly elegy book and his comments he's made in the past that speak much more to populism. It is also the night that we are going to see discussion of foreign policy, and he has his comments about Ukraine and Russia will be closely watched on that. He's made in the past quite a few isolationist kind of comments that America should not necessarily go and help these countries to the same degree that we have. We should not be spending what we've spent on their defense. So that will be very, very closely watched. And he will also, in a sense, be introducing himself to the American people tonight. A lot of people don't know him or don't know him well. He's only been a senator for a short time. And again, he's only 39 years old. He'll turn 40 soon. He is the next generation of the Republican Party, and people will be watching to see what that generation is going to be about.
Jody Schneider, Bloomberg's political news director, there joining us from Milwaukee. Let's discuss how the U.S. elections and, of course, the tensions with China ongoing may impact the Fed's rate path. Joining us exclusively is Rob Kaplan, vice chairman of Goldman Sachs. He previously served as the Dallas Fed president. Rob, great to see you here in Tokyo.
Good to see you, Shery.
How comfortable are you? Because I feel that this is...
Move a
little bit.
Right,
okay,
good.
There you go. I mean... We are seeing this momentum for President Trump, right? Yeah. Should we be getting ready for what he's dubbing Trumponomics, low interest rates, as well as low taxes? And what would that mean for the Fed's path?
So I think whatever happens, the Fed is planning and gearing up to cut rates in September. It won't move in July, but they'll move in September. I'll try to stay away from the politics of the two candidates, other than to say there's still 3 or 4 months left between now and the election. And the only caution I would give is that's an eternity. And at the moment, it may seem one way. I think this is going to have fits and starts. And the big topics, though, of debate, U.S. is an aging society, and we've got to find ways to grow faster with lower costs. We're very highly leveraged, and I think a lot of the debates are going to be about globalization versus deglobalization, energy transition, fiscal spending, and I still think those debates need to happen and get resolved.
What you just said right now, fiscal spending, it seems that doesn't matter who wins at this point, you would get more of it. I mean, you have President Biden leaning towards erasing medical debt. I mean, that will all have to come out of somewhere. So what would that mean if we get a more inflationary environment for the Fed? Is that something to be concerned about just next year, but this year the Fed stays put?
So I think if I'm at the Fed, I don't want to prejudge these policies. The things I'll be watching, though, the number one is what's going to happen with immigration. One of the things that's helped the United States this year has been workforce growth due to immigration, which has allowed us to grow faster and still improve inflation. If that gets revised or changed, or you deport people, they're going to have to bore in and understand that. Tariffs is a very significant topic. But the fiscal spending, I think the jury's out as to how a new administration will handle that. We're running in the United States close to 7% of GDP deficits at full employment. 2019, we're at 4%, and you're starting to see the stresses in the U.S. being able to sell the 10 and 30-year treasuries. So I still think there's a lot of debate on those issues yet to come.
Goldman Sachs, is it making calculations right now of potential tariffs being upped, even if it was President Trump, even President Biden right now talking about those tech controls?
So we have economists that have written and doing scenarios on a whole bunch of policies. But on tariffs is a good example. All things being equal, tariffs would raise costs. However, things are almost never equal. There are adjustments made. Maybe people substitute other types of products for those where there are tariffs. Example would be lithium batteries. If there are tariffs on lithium batteries, maybe the next generation of batteries made in the United States will leapfrog lithium. So I think the jury's out. I think people out there should just be prepared that there's a lot yet to clarify. The Fed, though, its path, I think, for September is pretty clear. I think there's a good chance they could do one more cut in December. But I do think if new policies come out, it'll take some time for them to digest those, and that may affect their next decisions.
When you take a look at the previous Trump presidency, how much of what played out in the economy and the inflationary picture was the fact that we did have a pandemic and some of the policy responses to that, and how much of it was sort of down to fiscal management, do you think? And does that give us a gauge of what potentially one way could go post-November? So
initially, after COVID first hit, there were substantial supply disruptions. Particularly for goods. I think as we look forward to today, those supply disruptions have pretty much been resolved. And in fact, we have goods disinflation, and China overcapacity has helped that disinflation. I think the substantial fiscal policy, the CARES Act was 2020, the American Rescue Act was 2021 and spent over the following years. Infrastructure Act, Inflation Reduction Act, that's $6 trillion of legislation. The COVID gap, quote unquote, was about $2 trillion. And so I think it's clear to me that we stimulated demand in the United States, probably overheated the workforce, and the Fed rate increases, although maybe late, they've now done what they needed to do, and I think it's starting to cool and rebalance the workforce. So initially it was supply. I think ultimately it was excess demand, and I think the Fed has worked hard to try to cool that excess demand.
We heard from Governor Christopher Waller saying that whilst final destination hasn't been reached yet, that they are getting closer. Do you feel confident that that dual mandate is now within reach? And do you think that sort of ultimate soft landing will be achieved? Is November a big threat to that?
So getting down to 3% was going to be relatively doable. I think getting from 3 to 2 is going to be slower. I would think that folks at the Fed think it may be slower. Having said that, we've made enough progress that I think they could do a rate cut in September. But I think people should be prepared. That doesn't mean we're going to kick off a rate cutting cycle. I think because fiscal policy and fiscal deficits are historically high, and there's other cross currents like deglobalization and the expensive energy transition, I think the Fed would be wise to, after September, take it one meeting at a time, assess any new proposals, what a new administration, if there is one, would do. And I think they'll be more deliberate, as opposed to what we've seen in the past. Once you start cutting, you usually have a cycle. This may not. I wouldn't prejudge that this will be a cycle. I think it'll be more one meeting at a time.
And so consequential for all of the global central banks, especially the Bank of Japan with the yen weakness. Right. Such a great time to have you here because you ran Goldman Sachs in the 90s here in Tokyo. Are you seeing, what is the difference, the biggest difference for you? I mean, I don't want to compare it to the 1990s, but just in the sense of, are you getting that feeling that normalization will finally happen in this economy?
So Goldman Sachs is celebrating our 50th anniversary of opening office in Tokyo. And so we're very proud of the Tokyo office, and I think it's been a model at Goldman Sachs for how do you build a office outside the United States, and it's helped us learn a lot about how to globalize the firm. So when I look at Japan now versus the 90s, there have been a number of reforms on shareholder governance, cross-holdings. The government has now been very encouraging of taking some 14 trillion of savings and turning some of it more to investment and really stimulating more capitalism. That's caused, there's been some reflation here. And so we're very optimistic across all of our businesses. There'll be great opportunities in Japan. I think Japan is a critical economy in the global economy and some of the great companies in the world. And so we think there's great opportunities here.
That's sort of the sense that I get when I speak to people coming from outside of Japan. But being here in Japan, there seems to be a lot of skepticism, especially that the BOJ's policies are actually leading to reflation that might be sustained, that actually people might go out and spend. How does the BOJ battle the deflationary mindset?
So what the BOJ has been battling is there's one headwind in Japan worth mentioning, and that's demographics. Workforce is aging. It's actually shrinking. GDP growth is growth in the workforce plus growth in productivity. And unfortunately, workforce growth here has been shrinking. And while there's been a good temporary worker program and more women in the workforce, there hasn't been any policy to combat that. So I still think that's the big challenge. The central bank can do what it can to try to ease that challenge, but ultimately you need other policies away from monetary policy to deal with this structural issue of shrinking workforce.
Rob Kaplan, good to have you with us. Vice Chairman of Goldman Sachs and former Dallas Fed President joining me here in the Tokyo studio today. Thank you.
Thanks, Shery.
Coming up on the Asia Trade, we'll talk market strategy with National Australia Bank and Lombard Odier as geopolitical risks hammer the tech sector. Also, preview of TSMC's earnings with Wedbush Securities. This is Bloomberg.
Take a look at this really terminal showing the big plunge that we saw in chip stocks, the biggest slide since 2022. And in fact, that semiconductor gauge in the US down almost 7%, the biggest slide since 2020. We also saw that drop in Europe as well. And this, of course, all of this reaction considering some of the comments from the Biden administration to allies that we've heard that they're considering severe curbs if companies the likes of Tokyo Electron, ASML, I should say, keep giving China access to advanced chip technology. Interestingly, though, even after that sell-off, we're still seeing some of these stocks trading at a premium to the index. Let's get some more on this. We'll bring our tech reporter Annabelle Jewellers in Hong Kong. And Belle, so we've seen such a big run-up in chip stocks.
Yeah, that's right. So really some of these names like Nvidia, for instance, were pretty much priced to perfection at this point. So as you say, a report that we could see even greater restrictions on some of these companies is going to cause a lot of concern. Just as you said, for people that perhaps haven't been so familiar with this story, yes, we could see greater restrictions on companies like Tokyo Electron, ASML in the Netherlands, Japan, who are seen as continuing to enable China's chip ambitions. The issue really comes down to how much they're continuing to service or maintain the machines that Chinese companies have already bought, and that's a really big sticking point for the Biden administration. But broadly, yes, analysts are sort of seeing that sort of risk of further curbs as a sort of black swan event for the sector, something that's quite unpredictable, unexpected, and something that can, of course, create a tradable correction for stocks, even though the flip side of that, what you hear from people within the industry is just how much these tougher rules would be enforced. We've already spoken with places or officials in Japan, for instance, who are saying that they wouldn't actually push ahead with them. And the timing as well, because you're approaching that US election and given how Biden is faring so far in the polls, are you really going to be listening at this point in time? But looking broadly at the tech sector, as you said, that run-up that we've had in names like Microsoft, Alphabet, their valuations are looking very stretched. But even with the sell-off, as you said, I think we've got a chart here taking a look at how much chip stocks continue to trade at a premium to the index, Shery.
Yeah, but really, considering what Biden's administration is trying to do at the moment, I mean, you sort of have to see whether that's justified, given the numbers that we're getting from some of these companies like ASML. I mean, we just got their earnings and their sales to China continue to surge.
Yes, they do continue. And even after we've seen further restrictions that ASML has followed to curb sales of its most advanced chip-making equipment to China, it still has been its primary market. And going back to the bigger issue here is really how much ASML continues to service the equipment that Chinese companies already own. But yes, the scoop actually really bad timing for ASML because it came out on the same day as its earnings, and the stock actually plunged despite the better numbers.
Tech reporter Annabelle Jewellers there with the latest on semiconductors. We do have more ahead. This is Bloomberg.
For investors who do want to get ahead, maybe a little bit of that politics, we think thinking about where to avoid the risks in your portfolio is one way to think through that scenario. And when some of the risk we see may include, for example, a potential steepening of the curve into the longer end.
I would say that there could be a near-term trade. The dollar could strengthen because, based on some of the proposals that Trump has been propagating. But at the same time, I think that the U.S. dollar is very expensive. And with rate cuts coming, I think that we'll get 2 this year, perhaps more successive ones coming next year. That should weaken the dollar.
We also have the September FOMC meeting wedged in between right now to the November election. So I think right now there's no issue with the case of the Trump trade, but it's more to do with this trade being quite premature right now.
Some other guests there on how to play the increasing chances of a second Trump presidency in the US. And of course, we're seeing a lot more volatility around these election expectations with the news that President Biden has tested positive for COVID. He says he feels good, but of course, lots more questions in terms of both the physical and mental wellness of President Biden and whether there's going to be more pressure potentially on his campaign. Taking a look at some of the currency pairs that we're watching, dollar yen was really in the spotlight this morning. We are seeing 155.69. Past 156 per dollar for the first time since June 12th. And that really kind of reduces some of that need for Japanese authorities to step into the market. We often see a bit of at least verbal jawboning to that effect at this point in the day. Let's bring in Ray Attrill, who's a global head of FX strategy at National Australia Bank. Ray, great to have you with us. And, you know, how much is this kind of still the reverberation of Trump's view on currencies and what we could potentially see in a second Trump presidency? Or is this kind of the build-up expectation that maybe Japan CPI is going to come in the right direction, that we are going to see that green light for the BOJ?
I think a bit of both is the answer. Certainly, I think that we've certainly seen US yields falling, and we've seen a little bit of a reconnection in the last week or so between yield differentials between Japan and the US and how that's played for dollar yen, although you have to say that in the last couple of months that relationship has really broken down. The yen is a lot weaker relative to what yield differentials would have you believe. We are heading into that sort of end of month BOJ meeting with a core view that the Bank of Japan will not only agree to a reduction in the pace of its QE buying, but is going to be minded to raise rates. Obviously, the Japan inflation numbers will need to be supportive of that, but we've already had, for example, last week we had the cash earnings data for Japan, and that's showing some pretty clear evidence that the impact of the Rengo and Shinto wage negotiations this year is producing a meaningful rise in wages, which is key to service sector inflation in particular. And then on top of that, I think there's no denying that Bloomberg's reporting of the Trump commentary about the weakness of the yen and the yuan clearly had a pretty meaningful impact, during the offshore session last night, and I think that's, it's pretty telling. But we're sitting here, 6 months away from an election where Donald Trump may or may not be president, and he's causing more volatility than anything else that's going on. And I think markets are going to be sort of ricocheting between, knowing that potentially the next president has a staunch weak dollar policy, also has a public commitment to tariffs, which we know from the 2018-19 experience proved to be very US dollar positive. So there's an inherent contradiction, if you like, between those two things. And I suspect that markets are going to be sort of, caught between, those two influences and having to weigh up the sort of the relative merits of both of those policies. And I think that makes for probably a more volatile currency environment than what we've had, certainly in the first half of this year.
On the Japan data front, as you point out, it's trending in the right direction. If the BOJ can sort of ride this momentum, how long do you think it will be for the yen to erase its losses of the year? That's our question of the day, by the way.
Well, if I look at our forecasts, we've got, I think we started the year around 140, didn't we, dollar yen? We've got the dollar yen being not too far from 140 at the end of this year. So if I'm being asked to fill in your poll, I'm going to say something around the end of the year, very much dependent on the Fed policy easing cycle commencing in September and 2 or 3 rate cuts this year, what that does to yields, and the Bank of Japan coming to the party with several increases in policy rates. So, 2 or 3 0.1% increases in the policy rate, and JGB's, trading, north of 1%. I think in that environment, you could expect that to happen, and it may be that as we get closer to the election, Japan may be more minded to be tolerant of yen weakness if they think that ultimately that's going to be something that makes for better relationships, if you like, on the trade front, if it is to be the case that Trump will be the next president.
Do you worry about currency wars at this point?
Absolutely do, and I think it has, to some extent, it's played out with this sort of axis, or nexus, as I call it, between the weakness of the Japanese yen, the difficulty that China has had in pursuing a stable currency policy in the face of Japan, in particular, continuing to steal a competitive march on other big export nations, basically, in terms of their currency becoming ever more competitive. And we have seen dollar CNY has gone from 720 to 725 up to 727, 28 before we had that reversal sparked by the BOJ intervention on dollar yen a couple of weeks ago. So if the yen weakness isn't arrested through some means or another, that remains a risk that other big exporting countries in the region are going to be minded to follow suit. So I don't think we're in a currency wars, but in the absence of a reversal in yen weakness, I still think it's a realistic prospect.
How passive can the PBOC stay then in that environment?
Well, they've proved to be, if you think about the beta, if you like, I look at the change in dollar yen and I look at the change in US dollar against the yuan is moving at about 1/10 of the speed of dollar yen, for example. So in that sense, they've been pretty passive, if you like, and it's almost like it's a passive acceptance of dollar strength or yen weakness that they've responded to. But I think the fact that the yuan has moved as little as it has, and that there has been a commitment by the fixings and intervention to hold it where it is, does tell you that I think that China's preferred policy here is one of currency stability. And again, thinking about the elections and the threat of trade tariffs, China being seen to be tolerating further yuan weakness at this stage is only going to inflame the sensibilities of potentially the next occupant of the White House.
Are Euro bulls getting a little bit too comfortable going into the next couple of Fed meetings?
Well, I think that there's certainly a view that, I think the base case for markets as far as the euro is, and thinking about French politics, is that however long it takes, we're going to end up with a new parliament there where the extremes of the right and the left don't have the levers of policy effectively, and therefore the concerns that markets have been trading with in terms of an already fairly dire French fiscal position getting very much worse. At the moment, the market is travelling the expectation that worst case scenario or tail risk is not going to eventuate. I think that's a reasonable proposition to have. And if the dollar is weakening, then there's no doubt that the euro will probably benefit just as much as any other currency. I don't think the ECB at this stage really comes into the equation, but on the basis that between now and the end of the year we're probably looking for more from the Fed than we are from the ECB. At the margin, I think that's helpful to the cause of euro dollar getting up to and through 110 during the second half of this year.
And maybe a bit more than marginal help for the Aussie if the RBA is a bit more of a player, but also, of course, then the divergent story as well.
Yes, well, obviously the near-term risk there is as part of this Aussie run-up through the sort of 67 area, which has been the range top for much of this year until the last couple of weeks, has been driven by heightened expectations that the RBA may be minded to raise rates again. So if we come through, we've got labour market numbers today, we've got CPI next week. If as a result of that, those expectations take a step back, which is in fact NAB's view, then the Aussie is a little bit vulnerable, and obviously the concerns about a new trade tariff war, overblown or otherwise, and the experience again of 2018, 2019 does say that Aussie is vulnerable, even though the price action alone has been pretty encouraging in recent weeks.
Great, always great to have you with us, Ray Attrill, Global Head of FX Strategy at National Australia Bank, and Shery, of course, at a time when we're seeing these very interesting moves in the yen, of course, and just broadly across FX, so much volatility that we're watching out for.
Yeah, political risk really affecting volatility across currencies in the Chinese yuan as well. These are some of the other stories that we're following, because on China, the World Trade Organization has accused the country of lacking transparency on the industrial subsidies in its first review in 3 years of Beijing's policies. The report says Chinese notifications on subsidies don't provide enough information on spending in sectors including EVs, solar, and chips. The US and EU have recently moved to impose new tariffs on Chinese imports amid claims of overcapacity. Chinese officials are reportedly testing AI companies' large language models to ensure their systems embody core socialist values. The Financial Times says the review by China's internet regulator includes ByteDance and Alibaba. The report says models are being tested on responses to questions, including many related to China's political sensitivities and President Xi Jinping. Hong Kong plans to introduce a licensing regime for stablecoin issuers whose tokens reference the price of the fiat currencies. The Hong Kong Monetary Authority and Financial Services Bureau say issuers will also need to publish monthly audits on reserve assets. The city is looking to fashion itself as a digital asset hub in a bid to attract investors. You can watch us live and see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation as well. Do send us instant messages. This is Bloomberg. ASML fell overnight as the prospect of further U.S. export curbs on its business in China offset growth in the firm's order intake last quarter. Washington is targeting the chip maker as it looks to stem Chinese chip advances. Bloomberg Intelligence Asia senior technology analyst Masahiro Wakasugi joins me now here in the Tokyo studio. And Masahiro, I mean, if you were the Biden administration, you really can't blame it for trying to curb these tech exports. When you look at ASML's numbers and really those sales to China continue to exponentially grow.
Yeah. So actually, maybe demand in China is pretty strong because they are aggressively invested in the legacy node technology or mature node technology because advanced technology is restricted, but still the self-sufficiency rate for the semiconductors in China is still low. So I think that China is trying to expand the capacity for even for the mature node technology chips. So I think that's the major reason why the revenue for the major equipment companies is rising. So even for the U.S. companies like Applied Materials or Lam Research, their revenue exposure to China is over 40% still recently. So I think that at this point, China is mainly investing in the mature node technology, not in advanced technology. But China can develop the advanced technology chips by using the equipment which they imported some time ago. So I think that this is what's happening at this point.
So if most of the business is in mature technologies and not the advanced ones that the U.S. is trying to target at this point, if we see more restrictions as they're threatening now, what would be the implications for companies like ASML?
So probably, as far as I read, some kind of media report, probably the maybe scope would be broadened, or maybe the more severe restriction could be imposed. So there may be some revenue impact on the ASML or Tokyo Electron. So we published a report saying that 10 to 15% of the revenue could be impacted going forward, but that's really hypothetical. And what happened at this point is that even after the introduction of the restriction, the revenue exposure to China is increasing, maybe quarter over quarter, not only for ASML but also Lam Research or Applied Materials. So I think that China may accelerate the mature node chip investment, even though the more restrictions would be imposed for the advanced technology. So that could be the the outcome. So, but if we look at advanced technology, the development pace could be slowing for China, but still, they can say that they can develop very much advanced, like 7-nanometer chips by using the older technology.
Could the results today from TSMC lift sentiment?
Yeah, regarding TSMC's results, I guess that probably the results should be no surprise because they already report the monthly revenue from April to June. But if we look at the guidance, it's we would like to see if TSMC maintains their 2024 revenue guidance. Now they are expecting like up 20, low 20 to mid 20% revenue increase is their guidance. So we would like to check whether they will maintain the revenue guidance. And also TSMC is now expecting the capex for this year to be around between 28 to 32 billion US dollars. So I think that we would like to check if TSMC will stick with the current capex number, or maybe narrowing, or could be raising the number. Yep.
That was such a bad model for
Bloomberg Intelligence Asia Pacific Technology Analyst Masahiro Wakasugi there in Tokyo. You can also turn more on these and when it comes to those TSMC results on your Bloomberg. It's at TLIV Go with that commentary and analysis from our team of expert editors. Some of the other corporate headlines that we're following today. United Airlines says it expects third quarter profit to fall short of Wall Street's expectations as carriers slash ticket prices to lure domestic travellers. United echoed Delta Airlines in warning that price cuts by low-cost rivals are weighing on the entire industry. Alaska Airlines is offering a similar outlook, forecasting third quarter and full-year profits below analyst estimates. Johnson & Johnson reporting a second quarter profit beat thanks to strong pharmaceutical sales. Adjusted earnings for the quarter of $2.82 a share, topping the average estimate by 11 cents. But J&J also cut its full-year forecast to a little over $10 a share to account for a spate of recent acquisitions. Beyond Meat plunged in post-market trading after the Wall Street Journal reported it started talks on balance sheet restructuring. The report cites sources say the company has engaged with a group of convertible bond holders. Shares are down about 20% this year on worries about weakening consumer demand for plant-based alternatives. More ahead on the Asia trade. This is Bloomberg.
The Japanese yen is steady at the moment after big fluctuations overnight and really over the past several days. Of course, we were seeing speculation that authorities had intervened in the markets twice last week, and we saw that sharp rally in the yen because of more speculation on that side. The weakness of the yen has helped Japan's exports. Take a look at the trade figures coming in right now. Exports rising 5.4% year on year. A little bit of a miss because the estimate was for growth of 7.2%. When it comes to the import figures, we're talking about growth of 3.2%, which is also below what economists had expected, and it's also a slowdown from the previous month. That leaves a trade balance of 224 billion yen in surplus. When it comes to the more specifics of those numbers, exports to the EU contracted by more than 13%, and to China rising 7%, exports to the U.S. rising 11%. Just a little bit surprising that we're seeing these numbers come in below expectations. Exports growth of only 5.4% and a deceleration from that fastest pace of gain since late 2022 in the previous month. So we'll continue to watch the ramifications of the weak Japanese yen and potential fluctuations when it comes to those trade numbers. But let's turn to another big story because we're just less than 10 days to go before the Paris Olympics begins. The city has transformed itself with 15 Olympic sites plus 39 others across France. Many existing venues are being used, but a new neighborhood is also emerging. Bloomberg's Caroline Conan reports.
Tucked between highways and railways, the Porte de la Chapelle neighborhood north of Paris has long been plagued by drugs and deprivation. But the Paris Olympics could be a game changer. The new Arena Stadium will host badminton and gymnastics and remain for basketball after the Games.
We have decided to create both this arena and a new university campus where in 2025 we will have 8,000 students expected. It helps us to win 10 to 20 years to accelerate the transformation of the city.
A few steps away, the underprivileged suburb of Saint-Denis, already home to the Stade de France, has been chosen to build the aquatic center and the Olympic Village. Most of the 15,000 athletes from around the world will sleep, eat and train here. After the Games, this futuristic place with low-carbon infrastructure shall become a new home for 6,000 residents and an office for another 6,000 employees. The legacy of Olympic infrastructures has not always been a success. The 2012 London Games did regenerate some deprived areas of East London. It's a different story for Athens, Beijing or Rio. The Games left those hosting cities with abandoned infrastructure and a big pile of debt. Paris promises this won't happen to the City of Light.
Bloomberg's Carolyn Conan there. And in preparation for the Olympics, when you think about Paris, of course, you think about the beautiful River Seine. I can't say I think about it being associated with the ability to swim there, even though, of course, you see Parisians doing that in the summer all the time, right, with the beaches along the Seine. But there has been a massive amount of investment and effort put into cleaning up the River Seine. In fact, we saw the Paris mayor, Anne Hidalgo, swimming in the Seine on Wednesday this week, seeking to really prove that the river is clean and ready for the Olympics and the Paralympic Games that kick off later this month. They put in about $1.5 billion for the cleanup of the river. There are lingering concerns, of course, that the overflows from Paris's sewage system are bringing wastewaters, bacteria into the Seine, making it therefore unswimmable. So President Macron has also committed to taking a dip at some point.
I don't know. I've never thought of that. I mean, I did get that beautiful boat ride on the Seine, gorgeous in the evening, but I can't imagine just swimming there. And I really can't imagine swimming in any big bodies of water very near to a big metropolitan city. I mean, you are in Sydney. I'm not sure if you guys dip into the river there, but of course, London faces the same problems. It's always about that sewage system and what could spill over into the river, right? And it also has to do with the weather. I mean, you get lots of rain, you get all these overflows. So it's a no thank you, I'll pass for me.
Yeah, definitely. We see that with the waters around the, Sydney Harbour. As beautiful and iconic and scenic as it is, I know there are some people that take a dip in there, but yeah, very, very interesting how we're going to see that, because there are these plans to have, of course, these triathletes jumping off a floating pontoon in Paris as well, and taking a 1.5 kilometre swim.
Yeah, gorgeous, gorgeous, but I'm not sure about swimming there. Take a look at how the markets are setting up now for, of course, the Australia Open. We also have the Opens in Japan and Korea. A little bit mixed. U.S. futures up 0.2%, but ooh, look at that. Nikkei futures down more than 2% at this point. I'm going to say probably something around semiconductors. We saw Tokyo election really leading the losses on the Nikkei, of course, the Biden administration considering whether or not to really apply more restrictions on companies such as Tokyo Electron and ASML when it comes to their workings with China. We'll have more coming up. The Opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after tech took a big hit overnight. Haidi, of course, we were talking about those Philadelphia Semiconductor Index stocks because they saw the worst day since 2020 on news that the Biden administration may be considering more restrictions for companies such as ASML and Tokyo Electron.
And geopolitics really weighing on FX as well, right? We're seeing these re-accelerated strength in the yen and the weakness in the dollar at play here as well. I guess some of this might be, the former President Trump's worldview on currencies, but we're also seeing potentially a bit more momentum with CPI from Japan and maybe the BOJ looking to take this chance.
Yeah, a lot of profit taking could be at play here for the Japanese yen as well, because we're talking about some of those gains that we saw overnight. As Heidi mentioned, perhaps speculation that we are going to see more intervention from authorities on the weakness of the yen. But right now we're seeing those gains towards 155 levels for the Japanese yen against the U.S. dollar. And that momentum on the Trump trade also fading a little bit. We had the Nikkei falling, the dollar index falling to the lowest level since May. But take a look at the Nikkei. It's down more than 1%. And we saw Tokyo Electron leading the losses in the previous session on news about those potential curbs coming its way. The Topics is also down 1%. We also got trade data earlier. We had seen pretty strong export numbers earlier in the year because of the weakness of the Japanese yen. But right now, really underperforming expectations and growing only 5.4% year on year for those exports here in Japan. Take a look look at the open in the Kospi because we are also seeing the Korean stock market taking a hit on those potential tech curbs to come. We're talking about the Kospi down more than 1%. The Korean won also strengthening. It's been stuck at around the 1380 level for quite a while against the U.S. dollar. We have that risk-off sentiment coming from that so-called potential Trump trade, but at the same time, expectations of rate cuts have been giving it a boost. So, Haidi, really diverging forces at play in the markets right now.
Yeah, we're seeing some risk-off sentiment, Shery, when it comes to just the first couple of minutes or so of this staggered start to trading here in Sydney. We're looking, if futures indicate correctly, maybe about downside of about 0.5%. But keep in mind, this is a market that closed at a record high in the Wednesday session, so perhaps a little bit of profit-taking. Also, potentially, some of those losses being shielded compared to some of these other more tech-heavy markets around the region. Australia, of course, with more financials contributing to those gains, as we did see yesterday, all sectors climbing there. We're also watching the picture when it comes to the Aussie dollar as well. 67.30 is where we're trading. Potentially with that divergence continuing to play out with the RBA and the Fed, we could see, as we heard from NAB a little bit earlier, potential for further upside there. Watching treasuries at the moment, that's a picture when it comes to a bit of divergence between the short end and the slightly longer then. We had a pretty strong auction there showing some pretty strong demand for duration at least. But of course, so much of this depends on the setup and expectations going into the next couple of meetings for the Fed, right, Shery?
Yeah, let's bring in our next guest, who's neutral on overall equity allocation and is waiting for those major catalysts, including the Fed, as Haidi mentioned, for the second half of the year. With us now is John Woods, Asia CIO at Lombard Odier. John, great to have you back. So we're waiting for the Fed. We're waiting for U.S. elections as well. Would you hedge some of that uncertainty right now? What's the setup looking like right now?
Well, the only conviction I have right now is that, as you suggest, uncertainty and volatility is likely to remain elevated for the duration of this year. I mean, not only do we have the election, but then, of course, we have the post-election policy that we have to assess and factor into our portfolio allocation. So right now we feel heading into this period that a nuanced strategic allocation relative to our benchmark is appropriate. And so to that extent we are neutral equities, but maybe seeking some value opportunities within that, for example, the UK. Also neutral, as you suggest, fixed income, but I'd be looking to explore the investment grade space positively once that election is behind us. And then, of course, we're also overweight the US dollar. In the run-up to the election, the dollar tends to do well in these periods of uncertainty. But once this interest rate cutting cycle gets underway, obviously it's something we need to look at more closely.
As you say, uncertainty seems to be certain at this point, but when it comes to geopolitics, even more so. We were worried about potentially more trade tariffs coming from a Trump White House, but at the same time, these tech restrictions coming from the Biden administration seem to suggest that no matter which way we go, we're still going to see more geopolitical tensions affecting business. Is there a way to invest around that?
Well, it is a bit of a perfect storm, isn't it? And if we do get these tariffs from the Trump administration, the way I'd look at it is akin to an oil shock, where higher prices diminishes economic activity, albeit temporarily, and then subsequently I suspect that we will see some deflation at work. So we might have a small temporary inflation shock, subsequently disinflation taking place. So it's a complex sequence that we need to account for and subsequently allocate in our portfolios. And again, all eyes will be on bond yields to see whether we see continued decline and or some volatility pushing yields a little higher until we get this uncertainty around the tariff story out of the way.
And of course, some of this is going to come down to potential restrictions when it comes to chip exports, right? And John, I wanted to bring up the chart that we've been sort of looking at all morning, which is a big slide of about 7% that we saw for the Philadelphia Semiconductor Index, and that was the biggest drop in over 4 years. When you take a look at how richly priced these stocks and their, sort of adjacent sectors are at the moment, though, they're still trading at a premium compared to the broader index. Do you see this as an entry point? Do you see this as a necessary sort of correction, and they're so priced to perfection that maybe it is time to take a pause on this trade?
Well, I think a rotation actually into value is becoming a little more attractive. I mean, the very narrow breadth of the so-called Magnificent Seven have been concerning me for a while, and to the extent we see an interest rate cutting cycle taking place, gaining traction this year and into next year, it's my view that these value sectors, materials, consumer discretionary, are likely to outperform, are outperforming currently with some reasonable traction. And so those are the areas that I'm keen to explore. I wouldn't immediately abandon the growth trade, the tech trade, but as you say, there are some concerns over valuations. But I think there are opportunities outside tech, and for example, we look at the small company and capitalization outperforming larger. So there's a tapestry of opportunity at work in the equity space, and something that we don't want to ignore.
Outside of the non-sort of, or I suppose when it comes to the non-US and non-USD complex that you talk about, a lot of the international flows have gone into these darling markets like India, like Japan is, where Shery is now. Do you see other opportunities, or it will be kind of a re-rotation back into these international markets?
Well, if you were an investor at the beginning of the year and invested in Taiwan, Japan, and India, you'd be very pleased with yourself, I suggest, and looking at gains of between 10 and 20% in many instances. I actually don't think that's going to change for the duration of this year. And of course, I am talking about local currency terms. But the momentum in these particular markets, at least over the medium term, I think, remain in play. Obviously, you've got a bit of short-term shock, ticker shock from the chip story last night. But I think, actually, that we will look through that. And these markets will remain robust. There may be some recycling further into next year, particularly if the US dollar were to weaken. If that were the case, we might start to see some inflows into some of these smaller markets, particularly in Southeast Asia, which enjoy a lower level of volatility and exposure to global trade. That will be an area I'll be looking at quite closely. But right now, I think it's a North Asian story in the shape of Taiwan, and I think increasingly Korea, obviously Japan, and this independent, consumer-driven, services-oriented market in India, I think remains reasonably resilient and insulated as well.
Yeah, when you said independent, services-oriented and consumer-driven market, after you said China, before you got to India, I was like, well, that does not sound like Japan. Is that going to be a problem for this market eventually, especially with the volatility in the Japanese yen? What's going on here?
Well, look, I don't think yen is suddenly going to start strengthening meaningfully over the near term. I mean, I think over the medium term we are likely to see some gradual yen strength, particularly as monetary policy is tightened, which we anticipate this year and next year. And of course, as we expect dollar weakening to play through once the Fed start cutting. But right now, I think that there's a bit of a debate going on in Japan whether or not a weak yen disguises and cloaks and delays some of the structural reforms that are really quite pressing and necessary in Japan, relating to corporate management, relating to labour market flexibility, etc. I think we all know what they are. But right now, the yen is a bit of a band-aid solution for these challenges. And I think once the government do address and grasp the nettle, then we might start to see a reversal in this relentless weakening of the currency.
John Woods, always great to have you with us, Asia CIO at Lombard Odier. Coming up next on the Asia Trade, President Biden forced to cancel a campaign appearance after testing positive for COVID. We'll be live to Milwaukee, where Donald Trump's running mate, JD Vance, is set to speak. This is Bloomberg. Well, President Biden has cancelled a campaign speech to a major Latino advocacy group after testing positive for COVID. The diagnosis came after Biden said in an interview that only a medical condition would make him consider standing aside as a Democratic presidential nominee. For more, let's bring in Bloomberg's political news director, Jody Schneider, who's in Milwaukee for the Republican convention. And of course, we're looking ahead to a key speech today. But Jody, before that, what's the latest that we know about President Biden's COVID positive test and how it's affecting him, and potentially the likelihood that we will see a change in the candidacy? He says he's feeling good.
Yeah, he says he is feeling good, Heidi, and that it is a mild case. But of course, anything that calls attention to the president in terms of an illness raises these questions that we've all had since that debate several weeks ago about his fitness, about his age, about his vitality. So he was trying to do a little counter-programming to the Republican convention, which of course is all about, trying to unify behind this ticket of Donald Trump and JD Vance. And he was trying to go to he was supposed to speak to a major Latino advocacy group about issues that would concern these voters, a voting bloc he very much wants to try to win in this election in November. Instead, he's getting on the plane, Air Force One, back to Delaware to self-isolate with a case of COVID. And his physician put out a statement in which he said he had a runny nose and a little bit of a fever and general malaise. That statement has caught a lot of attention, including on social media, given that the president, we have been wondering about what the president's vitality has been a real issue since that debate in which he appeared confused. His voice was weak. They later said it was a cold and he was suffering from exhaustion. But this all raises questions. And it comes on a day when a major Democrat, Adam Schiff of California, a representative who is running for Senate there, was reported by NBC News to have said that not only was he thinking that the president should drop out of the race, but he was concerned about what would happen in terms of winning back the Senate and trying to take back the House for the Democrats if the president did not exit. And that was a big voice to hear today on that.
Not to mention that the ABC News is now reporting that the Senate Majority Leader Chuck Schumer actually also told President Biden that it would be best for him to drop out of the race. We have seen his campaign really trying to strategize and move the conversation forward, especially trying to get more of those progressive votes. How much will that help?
Yeah, so we have seen this leftward movement just in recent days, certainly the last week, where the president has been trying to appeal to voters on left-leaning issues of economic prosperity, sharing that prosperity, on issues of housing, things that people complain about, young people complain about, that they have student loan debt, that they can't afford to buy a house, that they feel there's a lot of wealth inequality in the country. And even Bernie Sanders, who, of course, has ran against the current president in the last election, has stood up for him and said he's trying to do something. He's trying to do something to win back these voters who may not have been so interested in this race. But of course, these questions about whether he has the fitness, whether he has the ability not only to run but to serve 4 more years, have overshadowed everything from a policy perspective in the race lately. It's all about that, and it's all about will he stay in the race, and all these calls for him to perhaps drop out of the race. So that's really overshadowed anything else.
And of course, you're in Milwaukee, and we're looking ahead to really the formal reveal, right, of J.D. Vance as he introduces himself to Republicans as their vice presidential nominee. What are we expecting to hear from him?
Yeah, so J.D. Vance, 39 years old, he'll be 40 soon, the youngest vice presidential nominee in a very long time. The next generation of MAGA, as they say, is expected to really hit on issues talking about those who have been forgotten, probably talking about his past, made famous in the book Hillbilly Elegy, about his growing up in near poverty and somehow being able to overcome that, going to Yale Law School. He became a venture capitalist and then a U.S. Senator. He has not served in the Senate for long, and so this will really be an introduction to many people in the U.S. about who he is. We expect he'll tell his story, but we also expect he's going to talk about things on the international stage, as this is supposed to be Foreign Policy Day in the convention. And I think one of the things he's going to say is that the U.S. has to take care of itself first, that it will be a very U.S. first kind of message, and that countries that the U.S. wants to help are also going to have to pay their own way, that the U.S. is not going to be the country that pays for all these wars, that pays for all these involvements, that pays on the international stage, the protector of the world. He's going to hit back on some trade issues. He's going to speak, I think, about not only sanctions, but tariffs. And I think that's going to be a big message, that the U.S. to become great again, as is the slogan, will need to step up, will need to worry about itself more than a lot of these other countries. And I do think we will hear an economic message on that as well.
Bloomberg's political news director Jody Schneider there, as we continue to watch the geopolitical developments, especially around China as well. Shares of Tokyo Electron extending their slide following that Bloomberg scoop that the Biden administration is weighing further curbs on companies seen to be aiding China's chip ambitions. Let's bring in our reporter Annabelle Drewlers for more in Hong Kong. And Belle, so we are now seeing the fallout from that report obtained by Bloomberg when it comes to further restrictions on these companies. What do they entail?
Well, it's quite stunning. I think we can just sort of kick off with the market reaction here, because the report came out roughly 20 hours or so now. So we've already seen the action or reaction coming through for the likes of Tokyo Electron, which is named throughout this. So it just shows how much concern there is around it, because we're into a second day of losses here, and very significant as well. Because when I take a look at which companies are leading the sell-off so far for Asia tech stocks, it is Tokyo Electron that is in front centre. The story itself, so just to give a brief recap here, essentially what's happened is we're hearing from sources that are saying that the Biden administration could be looking at further restricting companies that are exporting equipment to China by invoking this FDPR. Essentially, it allows them to restrict or put controls on companies that use even the tiniest amount of US technology. That's the basis of it. Whether they would actually proceed with that, especially when you've got question marks, as you were just discussing there, around Biden even returning to the White House, remains to be seen. But it is that broader concern we see coming through in markets now of the geopolitical risks as we approach perhaps the election.
We're watching the ASML numbers, in particular for this company where China is such a core market. Is this sort of, you know, a very good case study of how much worse it could get?
Well, it certainly does highlight the dependency that these companies continue to have on China, because ASML, for instance, even though it followed the White House at the end of last year by further restricting the export of certain machines to China, it still has China making up roughly half of its revenue. So we just see, again, it's that level of dependencies, these companies. Tokyo Electron as well, it gets around 20% of its sales from China. It's really hard to move away from that sort of market, of course. Where we go from here, it is certainly a question of how much the US-led effort as well to rein in China's chip ambitions is continuing to run into roadblocks, because even if you do see those further restrictions in place, we've already heard from the likes of Japanese officials, for instance, on background, but saying that they wouldn't support such restrictions. Again, it's not just that risk of Biden being re-elected or a Democrat-led White House. You've also got the risk of Donald Trump returning as well. And he's someone who has been very clear that he would stick with a very hawkish stance on Beijing.
Tech reporter Anna Bordrola is there. Some of the other stories that we're following this hour: the World Trade Organization has accused China of lacking transparency on industrial subsidies in its first review in 3 years of Beijing's policies. The report says Chinese notifications on subsidies don't provide enough information on spending in sectors including EVs, solar and chips. And of course, the US and the EU have recently moved to impose new tariffs on Chinese imports amid claims of overcapacity. And Chinese officials are reportedly testing AI companies' large language models to ensure their systems embody core socialist values. The Financial Times says a review by China's internet regulator includes ByteDance and Alibaba. The report says models are being tested on responses to questions, including many related to China's political sensitivities and President Xi Jinping. Hong Kong plans to introduce a licensing regime for stablecoin issuers whose tokens reference the price of fiat currencies. The Hong Kong Monetary Authority and Financial Services Bureau says that issuers will also need to publish monthly audits on reserve assets. The city is looking to fashion itself into a digital asset hub in a bid to attract investors. Shery.
Yeah, Heidi, and you can get more on the U.S. presidential contest and other stories that you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers, go to Day Go on your terminals, also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get the news on the industries and the assets that you care about. This is Bloomberg. Take a look at how Asian markets are trading at the moment, because we're seeing the Kospi being dragged down by its biggest loser, Samsung Electronics. Of course, it's all about tech in this session after potential restriction news when it comes to some of those semiconductor makers like Tokyo Electron and ASML coming from the Biden administration. Heidi, Tokyo Electron right now seeing its worst day since 2015.
Yeah, we're also watching, of course, Shery, as you mentioned, so much volatility, geopolitical implications across the FX space as well. And we are seeing that strengthening when it comes to the yen, and in fact, that weakness in the dollar as well. Dollar yen are down to levels not seen since about mid-June. That kind of pretty clear cut when it comes to how we could see that pair trend even lower there as well, with, of course, US political uncertainty, US dollar yields there as well, and some of those positions being unwound as well. Euro also benefiting from that weakness in the dollar. This is Bloomberg.
Goldman Sachs Vice Chair Rob Kaplan says Fed rate cuts are now within sight given progress in the inflation fight. The former Dallas Fed president spoke to us exclusively about how the U.S. election race may impact monetary policy and the economy.
I think whatever happens, the Fed is planning and gearing up to cut rates in September. It won't move in July, but they'll move in September. I'll try to stay away from the politics of the two candidates, other than to say there's still 3 or 4 months left between now and the election. And the only caution I would give is that's an eternity. And at the moment, it may seem one way. I think this is going to have fits and starts. And the big topics, though, of debate, U.S. is an aging society, and we've got to find ways to grow faster with lower costs. We're very highly leveraged, and I think a lot of the debates are going to be about globalization versus deglobalization, energy transition, fiscal spending, and I still think those debates need to happen and get resolved.
What you just said right now, fiscal spending, it seems that doesn't matter who wins at this point, you would get more of it. I mean, you have President Biden leaning towards erasing medical debt. I mean, that will all have to come out of somewhere. So what would that mean if we get a more inflationary environment for the Fed? Is that something to be concerned about just next year, but this year the Fed stays put?
So So I think if I'm at the Fed, I don't want to prejudge these policies. The things I'll be watching, though, the number one is what's going to happen with immigration. One of the things that's helped the United States this year has been workforce growth due to immigration, which has allowed us to grow faster and still improve inflation. If that gets revised or changed, or you deport people, they're going to have to bore in and understand that. Tariffs is a very significant topic. But the fiscal spending, I think the jury's out as to how a new administration will handle that. We're running in the United States close to 7% of GDP deficits at full employment. 2019, we're at 4%, and you're starting to see the stresses in the U.S. being able to sell the 10 and 30-year Treasury. So I still think there's a lot of debate on those issues yet to come.
Goldman Sachs, is it making calculations right now of potential tariffs being upped? Even if it was President Trump, even President Biden right now talking about those tech controls.
So we have economists that have written and doing scenarios on a whole bunch of policies. But on tariffs is a good example. All things being equal, tariffs would raise costs. However, things are almost never equal. There are adjustments made. Maybe people substitute other types of products for those where there are tariffs. Example would be lithium batteries. If there are tariffs on lithium batteries, maybe the next generation of batteries made in the United States will leapfrog lithium. So I think the jury's out. I think people out there should just be prepared that there's a lot yet to clarify. The Fed, though, its path, I think, for September is pretty clear. I think there's a good chance they could do one more cut in December. But I do think if new policies come out, it'll take some time for them to digest those, and that may affect their next decisions.
It was Rob Kaplan, their Vice Chairman at Goldman Sachs, speaking to us just a little bit earlier. Take a look at how we're faring when it comes to Asian markets. Of course, a lot of focus when it comes to this chip sell-off overnight. The Philadelphia Semiconductor Index falling the most in over 4 years on these concerns over potentially even tighter curbs on chip makers that give access to China from the Biden administration. We're seeing quite a bit of downside there for the Nikkei 225, off by about 2.25%. We're also seeing a little bit more of a muted sense of losses on the Kospi there as well. That chip sell-off, though, continuing to gain steam, and some of those broader tech stocks being affected there as well. A stronger yen is also at play there when it comes to that downside that we see in Japan, as well as that chip fallout. We're also watching a little bit of weakness, but you can see that sort of relatively sheltered positioning of Australian stocks. We do have jobs numbers a little bit later today, but really that expectation potentially over the next couple of data points as to whether the RBA will hike or not. The Australian equities, I should say, that market closing at a record high on Wednesday. Let's take a look at how we're faring in terms of that accelerated sell-off in chip stocks. We're seeing Samsung Electronics, SK Hynix sort of bearing some of those losses. Tokyo Electron, though, over almost 11% lower, is one of the names that would be most affected. The Biden administration, according to our reporting, telling allies that it is considering severe curbs if companies, including Tokyo Electron, ASML is the other one, continue giving China access to advanced semiconductor technology. ASML, those numbers in focus today as well. Of course, we know that is a company that for the past 4 quarters or so has really relied on China as its biggest market. So a lot of these geopolitical concerns at play at a time where there are a lot of still domestic challenges for Beijing.
Yeah, a lot to be discussed in this very important meeting happening in China. President Xi Jinping will map out his long-term vision for the economy later Thursday in a closely scrutinized communique at the close of the Communist Party's 3rd plenum. Our chief North Asia correspondent, Stephen Engel, is in Hong Kong. Steve, so how specific are we expecting this statement to be, or will it leave us guessing again?
Yeah, not too specific. If we look at past communiques coming out of the 3rd plenum, that will usually be fleshed out further by the 24-member Politburo, which is also meeting later this month in Beijing. If you want to know, the 3rd plenum basically gets together the nearly 400 members and alternates of the Central Committee, all the ministers, academics, and all kinds of top government officials, where they get essentially the long-term planning ambitions and goals set by that man right there, Xi Jinping. So the communique will likely be issued later today as this 4-day conclave wraps up in Western Beijing, likely in a secretive hotel. They've basically been sequestered. We haven't had a lot of news flow, so there's been a bit of a guessing game as far as what could be coming out of that communique and how specific will it be. Probably not a lot. Are we going to get the market-moving news flow? Probably not. Could there be some more mundane issues about tax reform to help the finances at the local government level? Could possibly happen. Could there be news on hukou reform? That's the household registry. Possibly. Could there be support for AI and other technologies that, kind of go in lockstep with what Xi Jinping has talked about, and that is technology self-reliance, given the geopolitical headwinds? Probably get some lines on that. Again, we're going to get broad brushstroke slogans likely. Simply what Xi Jinping has talked about, high-quality growth. Of course, new quality productive forces is what he's talked about, and Chinese-style modernization. Then we got to read between the lines and the tea leaves, so to speak.
Leaders must be very watchful at the moment going into November in the US. How much will the growing possibility of another Trump presidency be factoring into the communique or some of the thinking across the leadership?
Yeah, I think it's buckle up in Beijing, of course, because, again, Donald Trump, at least on the campaign trail, has talked about 60% across-the-board tariffs on all Chinese products imported into the United States. And, again, UBS earlier this week in a new research report said if that happens and they follow it to the to the letter of the law, if you will, that could shave China's GDP growth by half in the year following the implementation. So again, I think the whole world is kind of looking and trying to figure out what another Trump presidency would mean on the trade front. And I know, our columnist Shery Ren will be joining us just a moment to be talking a bit about the vice president candidate, J.D. Vance, and his position on China as well. So it could be absolutely adding a lot of uncertainty at the third plenum, but going forward in the forward planning for Beijing.
Chief North Asia correspondent Stephen Englewood, as Steve just mentioned, J.D. Vance's memoir, Hillbilly Elegy, went viral in China after he was named Donald Trump's running mate, with a Chinese language copy widely downloaded and forwarded. Let's bring up Bloomberg opinion columnist Shery Ren, who thinks that Vance's success is making President Xi Jinping look bad. Shery, so Vance has made clear he's no fan of China. It's very interesting that his novel has gone viral in the Chinese market. These themes really speak to, some of the main societal worries in China right now.
Absolutely. I mean, there are, of course, the far left in China who like to trash the U.S. whenever they can. But I think the reason why J.D. Vance's book was forwarded and downloaded so many times is that people are just mesmerized. They think, wow, somebody coming from such a humble background and such a troubled childhood can actually rise to the very political top before the age of 40, right? And China has a lot of hillbillies of its own. We're talking about the migrant workers. And China has 300 million of them, according to the government's own statistics bureau. Basically, these people, they leave their hometown, their villages very early on in their life, like 16, 17-year-old, and they go to big cities to do, menial jobs like construction working, low-end manufacturing, working for beauty parlors, restaurants, etc. And unfortunately, these Chinese hillbillies are being left behind by President Xi Jinping's new productive forces, right? Like President Xi Jinping talks about the high-end manufacturing, but 30% of these migrant workers, they don't have more than 9 years education. Like we're kidding ourselves that they will be making robotics or semiconductors. They're not, right? And on the other hand, with the property downturn, with the slow retail sales, what's going to happen to them? Also, these people are getting old. They have been coming to the city since the early mid-1990s, right? 30% of them are over the age of 50, and the average age of a migrant worker is 43. And just like what Stephen said, these people don't have the hukou, the urban permanent residence, right? And then as a result, they don't have any social security. So these people, when they're thinking about, it's time to retire because they're doing blue job work, right? And then suddenly there's just no social security for them.
Does this then mean that perhaps Chinese people are watching the Republican National Convention more than they're even paying attention to the third plenum at this point? And how significant would that be?
I think it just shows how this engaged and the society is towards China's political process. I mean, by following U.S. election in real time, Chinese people get to know the pressing topics, socio-economic topics in the U.S. And these topics are also existent in China. It's just they're not being talked about in any public discourse. And China's economic downturn has been going on so long. This plenum is such a black box. All the meetings are private, and we don't even know what they're talking about. So there's just so much disengagement. And the wealthy people, if they can, they will leave China. The people who are having a hard time with their life, like the migrant workers, I think they are very, very unhappy right now.
Julie Ren, always with those great opinion pieces. Do check this out. J.D. Vance's Hillbilly Success Makes She Look Bad. She's, of course, our Bloomberg opinion columnist. We have more ahead. This is Bloomberg.
We'll take a look at the chip sell-off continuing unabated in Asia. And of course, we see some of those biggest sort of laggards on the markets today, including the likes of Tokyo Electron. We've come off some of those session lows, but still at one point we have seen that stock trading the lowest, down the most, I should say, in about 9 years. The worst hit out of these chip stocks in Asia so far. It comes on the back of the Philadelphia Semiconductor Index, seeing that 7% slide, the biggest in over 4 years, on these concerns of even stricter Biden administration curbs on some of these chip makers that continue to give access to China. We're also watching TSMC, of course, as well as ASML. Some of these numbers coming through, in particular, watchful for these companies that have a bit more of a market share in China, of course. Let's get some insight with Matthew Bryson, who's the Senior VP of Hardware Equity Research at Wedbush Securities. In a way, we've been looking at the pricing when it comes to these stocks, priced to perfection, so sort of richly valued at this point. Is this, in a way, an excuse, I guess, for some repositioning given the rally so far, or is this an existential threat for some of these companies?
So I think certainly what we saw today was in part these stocks being priced where they are. So when you think about the news from the Biden administration, if they were to regulate or put stricter regulations around semi-cap equipment companies supplying to China, that really wouldn't have much impact on, say, NVIDIA. And the comments by former President Trump, again, whether or not he would try to charge Taiwan for military protection, again, doesn't really have much to do with NVIDIA. So certainly when you look at a lot of the names that were affected today, they aren't directly impacted by shifts in the regulatory environment or greater China tensions. At the same time, certainly if the Biden administration did create stricter regulations around semi-cap equipment sales, that would have impacts for the semi-cap equipment vendors. So, I mean, there are some impacts, but I also think that a lot of what we saw today had to do with the fact that the valuations were as elevated as they are.
Matthew, does it meaningfully change the outlook for you, or is it sort of more of a wait and see, make that decision if we get a few more details about whether or not this could actually happen?
No, so you look at something like Taiwan Semiconductor, look, regardless of what the administrations do, at the end of the day, Taiwan Semi is the only company that can supply the most advanced foundry processes. So when you look at Apple, when you look at NVIDIA, When you look at Qualcomm, MediaTek, there aren't really other options now. There aren't going to be other options in the next 2-3 years. And so regardless of what the administration does, unless they want to slow down the advance of technology, Taiwan Semi is going to benefit because advanced semiconductors are able to do things that less advanced processes can't provide. So when I look at TSM tomorrow, I think you're certainly going to see them give us, well, they've already given us numbers for Q2, but give us a strong guide based on NVIDIA seeing strength in their AI business, on Apple having better expectations for the iPhone, on something of a rebound in handset and PC production. I don't think what the Biden administration is looking at has much to do with those end market improvements or TSM's technology lead.
What are we seeing in terms of smartphone demand in the latter half of this year?
Yeah, so what we've seen over the last, or at least what my checks have suggested over the last 2-3 months, is that there's been a bit of a pickup in builds on the Chinese handset side. Certainly, there have been a few articles out about Apple being more positive regarding what demand for the new AI-enabled iPhones will look like. And then even when you look at the first half for Apple, back in March, February, there were significant concerns about share loss in China and how that might affect their shipments. Those concerns seem to have faded away. And last time I was in Taiwan, people were talking about relatively steady builds. And so it feels like if generally people have been looking for a slight rebound in handsets, that we're looking at something a little bit better than that. Having said that, I think at some point the hope is that you'll get larger refresh cycles, both for handsets and PCs, tied to AI capabilities, and I don't quite know if I'm that optimistic yet.
Mm-hmm. Matthew, given the concerns around Taiwan and China, how much in terms of diversification are we seeing, both from TSMC in terms of location and also from other companies trying to diversify supplies away from TSMC?
Yeah, so I mean, what TSM has said is that the reason that they are moving to other geographies, whether it be Japan or the US, is because they have customers who want them to be producing in other geographies. So it is completely about diversification. I mean, certainly that's helped by subsidies to some extent, whether it's from the Japanese or the US government. But I think at the end of the day, Taiwan Semi will tell you that it would be more efficient for them to produce in Taiwan, and they're shifting production because their customers are asking them to shift production. And I think if customers are willing to pay more to offset the cost, then Taiwan Semi is willing to build in other geographies.
Matthew Bryson, good to have you with us, Senior VP Equity Research for Hardware at Wedbush Securities. You can also turn to your Bloomberg for TSMC's second quarter results. Go to TLIV Go to get commentary and analysis from Bloomberg's expert editors. This is Bloomberg. We continue to watch the risks around geopolitics, Haidi, of course, as a Republican National Convention is underway. At a time when we just heard that President Biden has tested positive for COVID, really all the focus right now on his health, as we're seeing more momentum for President Trump. But at the same time, Haidi, it seems to be the consensus that when it comes to China, it will really be pushing hard against Beijing, whether it's on tariffs coming from President Trump or even the Biden administration right now. We're hearing that they are considering more restrictions on tech exports.
Yeah, and this was sort of the way that we went into the previous election cycle, right? We know that regardless of who ends up in the White House post-November, in January next year, there is that sort of bipartisan tension and tendency, and the direction of travel is to continue going hard on Beijing. We're also looking ahead in Milwaukee with the Republican National Convention, of course, a sort of formal introduction for J.D. Vance to introduce himself to Republicans and his supporters as the vice presidential candidate for the Republican Party going into the November elections. And, you know, a lot of people know him as being, of course, a best-selling author of Hillbilly Elegy. His story is quite well known by this point as well, but he really is going to be kind of selling himself to the broader base and supporters in terms of trying to talk about the elements that have seen him being so popular with donors and more of the Republican elite so far. Of course, that sort of rags to riches story, his focus on the poverty gap and wealth disparity will be, no doubt, some of the key themes that he'll hit on. And we can see, of course, the former President Donald Trump there walking into the Republican convention there, a bit of a fist bump there. You can still see his bandage across his right ear, and we will be hearing a lot more throughout the course of the evening there, Shery.
Yeah, that shooting over the weekend in Pennsylvania really giving the former president a boost when it comes to the polling numbers, especially headed to the November elections. And this as we continue to watch the markets, especially the semiconductor side of things, given potential restrictions to come from the Biden administration as well. The China market opens is next. This is Bloomberg.